Being said, can we kind of now say that that period of anxiety is fading? And if so, what does that mean for the stock market? Let's ask Rosecliff Partners founder Mike Murphy, Veritas Financial Advisors Managing Director. We've got as well, and Bolving Wealth Management Group President Gina Bolvin, and of course Greg Brandt as well. All right, the Goldilocks scenario. You know, the jobs report. It came in huge, Greg, but there were some issues with it, and I think that's one of the reasons the market's rallying. I think it made the Fed's job easier.
I would agree. For the foreseeable future, the Fed can keep its posture right where it's been, which is they're not going to do anything to disrupt the historic liquidity, the historic monetary accommodation. The jobs number came in 50% above what consensus is expecting, which I think is a good indicator that estimates for companies are probably way too low for the back half, particularly as well.
You know, technology came on real strong last week, and of course this pendulum has swung back and forth. Where are we, Mike, on this? I mean, are we back to growth over value?
Hey, Charles, great to be here. Yes, we are, but Charles, I would say we never really left. So you had that quick rotation away from tech that lasted a couple of weeks. But now you look at Microsoft, even look at Facebook, which we don't own, but back well above $300 now. Apple trying to break out above that 125 level. These companies are where growth has been and where growth is going to be for the foreseeable future. So, Charles, you talk a lot about the investors at home. People watching at home, don't try to get too cute by rotating out at tops and into bottoms. Stick with the growth story. Right now, this market is telling you, as you point out, we have an accommodative Fed. We have strong earnings coming for this year. Stick with your growth stories, and that's big tech.
Gina, how's it playing out?
Well, I think short term that value has legs. There's a lot of momentum in the value trade and the reopening trade. However, it's not the Red Sox or the Yankees. When you think about growth and value, you don't have to be a fan of just one. You can own both, and you can like both of them. If you think of technology and you think of the FANG stocks, it comprises almost 50% of the S&P. So I think that you can't like the market without liking technology. You have to like it.
Yeah, and I think right now, and I think the market's liking both right now. You know, I don't know where everyone is right now, but it was an amazing weekend throughout most of this country. Travel picked up, theme parks picked up, movie theaters picked up. You know, so it gets us back to the question, and you can see it in today's session, the reopening trade. Cruise lines are leading the way. So, Greg, are you in these ideas? Do you like these?
Yeah, look, I think there are some great reopening trades. I agree with Gina. There are some select, discrete growth stories that I like, but we need to be more discriminate when it comes to growth. In terms of value and reopening trades, go where you know the business models. So we know what the business model looks like for restaurants. We know what it looks like for casinos. We don't quite yet know what it looks like for cruise lines or for airlines. We don't know if consumers are going to get over the stigma. We don't know if we're going to see pre-pandemic levels anytime soon. That said, the estimates for the back half of the year, again, for most sectors are at a serious discount to what pre-pandemic levels were. And so I do think we'll see a back half earnings revision and upside surprise story.
Mike, where are you with respect to these reopening trades? I mean, is it what you were saying earlier? Are people getting too cute? You know, I got out of Norwegian Cruise Lines at 32. It's up today, but it's not back at that level. And I'm wondering, you know, again, and maybe Greg made the best point, stick to your knitting at this point. Go with the names that you know and that you really feel comfortable with without all the thematic stuff.
Stay in your lane, as the kids say, Charles. Yeah, I think, you know, a lot of the things like the airlines or even more importantly, the cruise lines, those are trades, Charles, that, you know, professional traders, people who want to make a few points and get out, and that's their game plan. I think there's opportunity there in reopening. But for me, as more of an investor, I'm looking at names like Uber. As rides, more cars get on the road, as Uber starts pulling more levers, I'm sticking with that story, and you know I've been talking about that for a long time. Also, Walmart, reopening trade there, because it just hasn't really rallied since a TikTok deal fizzled out, but Walmart's going to be part of a reopening trade. So stick to what you know that hasn't rallied yet. And that to me is the best way for your viewers to benefit from the reopening trade.
You know, all of you remember when Wall Street used to always play a guessing game on what was the next big takeover. Right now, corporations are sitting on a record amount of money. They started to re-engage in stock buybacks, but they've got a long way to go. And there really hasn't been any mega deals out there. Gina, I mean, can we see with the markets at all-time highs at least some consolidation, and if so, where?
Yeah, absolutely, Charles. I think that we're going to see more deals because of high equity valuations. And the areas that have the most innovation and disruptions, like technology, like healthcare, that's where you're going to see the most consolidation and acquisition. But I also think it's interesting, you're going to see some more M&A in some of those companies that were really poised during the pandemic that did really well. And they're trying to figure out where their next act is from. And it may come in the way of acquisitions.
Greg?
Yeah, I agree with Gina, and I'd add a point. And so on the one hand, you will see lots of tech and growth M&A. They have very strong currencies. Capital is still very cheap. So even if they have to buy growth at a premium, they will be poised to do so. The other area I'd take a look at are assets that are still undervalued. Walmart was mentioned. Some of the retailers I'd put in that category. Some of the financials I'd still put in that category. And certainly energy I'd put in that category. So look for sectors that have not had the multiple revisions where the assets can be picked up on the cheap, per se.
Yeah, I know the energy space. I've been looking for like a sort of a big rush on the Permian Basin area. I know there have been a lot of private deals. I'd love to see a few big ones as well. Mike, Greg, Gina, thank you all very, very much as we start off a strong week. We appreciate it all. Meanwhile, folks, Janet Yellen unveiling her